do 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 do. All right, guys. This is a podcast for my bad charts, a YouTube channel, guys. Haven't done one in a super long time because all the focus is on NorthstarBadCharts.com, Northstar Bad Charts, the YouTube channel. But for you guys that are still subscribed to my bad charts, here's a little thing to go. There's some charts. Look at that, man. Peter Spina, the gold rush into miners is restarting. Wahaha. But seriously, this kind of feels like something could be happening right now. Here, I'll just go over my two big picture charts, and then I'm going to zoom in on what I saw just recently, doing a small recap of gold and silver. So let's start with the gold chart, guys. This big chart I did December 15th. And 3-year moving average, when the price action goes above for gold, huge momentum, something big. You see here in March, that's the GFC 2008, never closed below. So that's powerful power trend. And when it did close below, that was like, it stayed there for a couple of years, right? 2013, 14, 15, 16, then started waking up. So that's fine. Consolidating above an inclining 3-year moving average. A lot of people think that this could be 2013 type of top. I kind of thought it was like here, maybe 2001, 2, 3, 4, 5 type of top. The SPX to the gold ratio is not quite the same setup. It really had started turning here, not quite here. They're both more moving together. But let's just look at that chart and look at the distance from the 3-year moving average as momentum, like Michael Oliver, his momentum structure analysis. Just a pivot line. So this 1, 2, 3 from above, tested a lot of times. Here, can't go above. Right now, it's right on it, just a little bit lower. So here's the structure. So fractals, previous behavior, how it behaved after. See here, after the 2013 top there, we've had a long run. But right now, gold had a nice base below its 3-year moving average. And then starting going back above. That was a huge warning sign, a good sign. We've had this right here in 2019, 20. Went up, stretch, fear of missing out, resets, lets the price action get back close. And we're right here, guys. Super tight. You don't want to get below like a huge scare like that. So this is the type of region where the price action for gold really has to start moving up strong for for it to be able to push off the 3-year moving average. And we'll zoom in today there and we'll see the action. But this is actually like, if you say this is first inning, second inning, third inning, well, this is just the first one we just completed, guys. All right, let's go look at the silver chart. Another same type of analysis. See the fractal here, dwindling now below the 3-year moving average, but coiling up below the 3-year moving average. Starting to coil up, explosion, reset, fear of missing out. Silver always gets a lot of people fear of missing out. Then long consolidation where everybody gives up. So silver is retesting its breakout line. So it pulled back way more than it did back in the 2004 explosion. So it really has to start turning up right now real hard. And we'll zoom in on the smaller time frame charts to see exactly where it has to do. But again, first inning, second inning, GFC interruption, and then the third parabolic inning. And that's what I'm waiting for silver before calling it quits. I want to see this huge stretch above the 3-year moving average. And I didn't even show you what happened in inflation cycle in the 1970s. This thing went up way much higher than that. All right. So let's look at gold, guys, super closely. Monthly chart, fine. But I zoomed in just on this consolidation pattern above the 3-year moving average. And look at that there. 1 month can't close above this line. So that line's starting to have some importance. Next month after that, can't close above. Okay, 2 months, can't close above this price point, 1815 or 1816. Fine. Third month goes back above. No, goes down below. The next month of that, touches it on the smaller time frames, closes below. The next month goes all the way up high, tests this huge breakout line or this possible line that's morphing into existence, Everybody's looking up here, but it can't close above this line here. But look what happened previous month in December. It actually closed above 1, 2, 3, 4, 5 months sideways move. It closed above, and I'll show you the point and figure chart where this has some more significance. All this while the 3-year moving average is squeezing the price action up, and gold's like a magnet is getting repulsed from that 3-year moving average. And that could be a ninja breakout. And look at that, during the month, price action all the way back down here. Oh, it's the end of the world. But in a couple of days, the price action could move back up. So right now we're in first half of January. Let's see where it closes. If it goes and tests this upper breakout line, if it's going to close back above. But this is definitely not bearish, guys. Not bearish. I know you want to look for bearish scenarios, but this is not a bearish scenario right now. All right, here's a PNF chart for gold. Reduced noise. A while back I did this chart, so I just posted back today. On the gold futures, it's like that. On the spot, it hasn't broken out yet, but on gold futures, it had the middle of the X's is where the price action closed. 1, 2, 3 touches, man. So whatever you break out above that 3-point touch line, it's a valid breakout. We had it this is probably the previous month, but it's point and figure, so it's has the time scale, guys. Only adds. See, if the price action would have kept going up, just like here, this could be years. As long as it doesn't pull back, the block size times 3, so $75 on a daily close doesn't close $75 below. It doesn't add a new column of O's like it did here. So here it broke out. It closed above. See, it did $75 above here. Did 1, 2, 3 reversal. And then every day that it closed $25 above that, it added an X. Then it reversed. So it went back down, at least went back down 25, 50, $75 on a daily basis close. So now we got the reversal, but the reversal now is just testing this breakout line. So this is a ninja breakout. This is the back test. As long as we didn't have a daily close at 1750, then this breakout line is still valid. There's a back test. And right now the price action, I don't know, it's at 1820 or something. So to get back a 3-box reversal back up, so 25, 50, 75. So if we get a daily close at 1850, we're going to have a new series of 3 X's going all the way up here back to this one. So that's going to create a nice horizontal breakout line above. So it's a consolidation pattern. That will be its breakout line above the wake up trend line break here. And as soon as you get a daily close at 1875, so one more box above this horizontal breakout line, it's go time. Rocket ship. Here's the measured move I put. Add on top, 2300. It could get really, 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 really violent once that happens, guys. So oh yeah, this last chart. Okay, these charts are super critical. Okay, the silver. Okay, silver versus minor. Last one, guys. I'm using past because I realize that past looks a lot like SILJ and has a lot more history. So you're able to grasp where the highs are, where see, I couldn't have drawn an arc on the SILJ because I don't think I have price action goes all the way back to 2004-5. Here, look at that beautiful wedge, breaks out, target reach, overshoots, everybody gets on top. 1 touch, 2 touch, 3 touch, maybe 4 here a little bit, 5, look at that wick. 6 touch, right there. And I posted that today. Silver miners on brink of disaster because you want the silver miners to always outperform silver. You don't want them to break down versus silver. You want them to outperform. And just by miracle today, it's starting to turn around. And right here, I could have zoomed in. There's a line right here, and it seems to have broken out and retested that descending trend line. Combine the fact that you're very close to that descending trend line channel right here, close to the arc, possible arc right here, 1 touch, 2, 3. If it starts turning up here, you're at a confluence of fear, a lot of fear. People think it's over for silver miners, and support. And if that turns up, this could guide the ratio of silver miners outperforming silver all the way up to 2023 to maybe now will be the target. Who knows if it overshoots, then expect to pull back towards the side of the arc, and then another run up to 2026 for silver miners versus silver. Here's the 7-year rate of change. You see we had a violent explosion, a full reset, and here's the breakout line. So if the 7-year rate of change should really start moving up above this breakout line, That means silver miners really have to pick up steam and outperform silver. So that should be pretty epic if that happens, guys. So that's it. That's my small recap of the precious metals complex. If we're at a turn, this is it. Probably snuck up on us last month. Sentiment was really tough, and that long consolidation. So looks great, guys. Thanks for watching. Ciao. Do 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 do.